Boom. We are live, ladies and gentlemen. Look at this. Stealing the Arcane Bear. Thank you all for joining us today. You might be able to tell the light behind me is still green. Part of the thing I want to go over first off is that to get here, when I bought my first Bitcoin at around, well, it's kind of a complex story, but just in general, I've been a contrarian my whole life. Most of the things I invest in before most people think they're cool. The first time I did ayahuasca was back in 2008 in the middle of the jungle when nobody really knew what ayahuasca was. Now it's cool, and now almost everybody all the big CEOs, go out and do it on their private yachts. Maybe that's not entirely true. But the point of this is, I usually like to arrive early to understanding where and why it is I make an investment in a particular idea. So what I'm going to do today, well, first off, let's start by going to this particular part. Boom. If you have not yet, please give us a thumb up and subscribe to this channel, because right now we are only 24 people away from breaking into 35,000 Bear family strong. So please remember to hit that subscribe button on the channel and the little bell to be notified when we go live with these videos. Now, in terms of being a contrarian, right now there are many YouTubers and people who've probably never studied Wyckoff trading ranges before, looking at these distribution schematics and going, hey, well, there was our UTAD test, and here's our breakdown, and we're in our major sign of weakness now. And this is a very good, again, we've gone over this a few times, that this is one of the most difficult aspects of the middle of the market. Now, and this is also why I suggest showing up before the middle of the market takes place and getting here on time, because then there's a lot more room to play around. Even though we're currently in a 25% down move today, some of the things I want to go over will hopefully help align my sentiment about my contrarian beliefs. Now, again, we've talked about that there is a possibility to drop below into like $32,000 to $35,000 area and create an analog of what we had gone over prior, which would be a reaccumulation after decline. But let me show you the difficult part here by highlighting, well, first off, this is what the distribution schematics look like that a lot of people are talking about. And here's a reaccumulation schematic. And this is probably one of the most difficult aspects about reaccumulation, is look at the similarities here, especially in the top upthrust, right? Here you have a point of upthrust, which could be discerning, right? Especially because we don't know, and in phase C of a reaccumulation, you do have what appears to be a sign of weakness where your spring drops below your two previous shakeout points. So right here would be our shakeout, and we've dropped below that. Right, so here we have that phase C downtrend, which is ever so prevalent. And again, this is the real difficult part. No matter how much you study, how many books you read, these later moments in the market are significantly more difficult to distinguish, period. And I don't mind that. But what I want to go over is some of the more important parts. So generally, this is just a schematic, right? This is the general architecture of the trading range itself. And here at distribution, we see that same thing. So people are thinking that we've had our signs of weakness, and that's where we're at right now. And a big part of the question is, okay, well, if this is our sign of weakness, or is it a spring? And we have talked about this over and over and over again since this bull market started, that one of the most difficult things to do is really tell the difference between the reaccumulation schematic and a distribution schematic. Now, I generally like to be a bit more patient. This moment here that we're seeing, which I still believe is a spring, usually has a bit of reprieve, right? Where we're going to get a final test or a final jump back up. It just doesn't just fall to $32,000 all of a sudden. There's a lot of support here. And we want to go over that by, again, justifying our sentiments here by looking at one of the most important aspects of the structure, which is not in any way located in these charts. And this is generally the way to tell the difference between someone who's been studying these things significantly and someone who has not. There's no volume signature or supply signature in either of these schematics, right? That's the difficult part. So just for fun, let's remember that the internet is full of free guidance. So we can go distribution versus reaccumulation. Let's see what the internet has to offer us for free. So rev up with reaccumulation trading ranges. I believe this is by, yes, Bruce Fraser, longtime industry leading a Wyckofian. And here we go. This is another form of the kind of conventional reaccumulation trading range. Although there are variations in this format, again, the one that we think this is schematic one, where we do have a phase C kind of drop below our two previous shakeouts. But let's just kind of go over this. So reaccumulations have various looks, and here's one example. Absorption occurring within the range and trading ranges possesses with the creek over diminished volatility and volume. An indication of reaccumulation is nearly concluded is once absorption is complete jumping action will take the price out of the trading range in a new markup phase. This is a place where White Coffeeans get busy adding shares. So I'm not going to add any more. I added a little bit of Bitcoin yesterday, around 42,000, and a few more the day before that. Just in general, for two reasons. Primarily, we've gone over our sentiments about the miners, and that if we really stay this low, we could maybe get Bitcoin goodbye. And I don't think that's the case. There are far too many large vested interests in this new asset, and it also offers a lot. So you'll also notice that Elon Musk did not sell his Bitcoin, although he tempted the world by saying, "Oh, indeed," to a big crypto scammer known as the crypto whale. But again, this is the difficult part, is reaccumulation and distribution can look very, very similar. Note here, these are three reaccumulation patterns prior to distribution, where you have what would appear to be major signs of weakness and enormous amounts of supply coming into the market. Now, one of the ones we've always talked about is the laws of effort versus result. And the whole market is generally in red right now and kind of feeling the downtrend. So what was this, about a week ago or 2 weeks ago? Geez, time just flies in this market. I took a bunch of risk off the table at around this $55,000 to $56,000 area. Like I said, I was like, okay, well, I'm not really sure the direction of the market here. We're in that area right now where it could go basically either way. But fundamentally speaking, Bitcoin is undervalued in compared to what it costs to mine and produce it. And if we're thinking about network security, the long-term growth of a collateral layer, it makes sense to me that I'm just going to take some risk off the table approximately here. And that's what we did. So when we're seeing this downtrend, I'm not particularly worried, right? Because everything I left on the table, I'm prepared to sit on for 5 years if need be, right? It's a long-term game plan. I've always tried to assert that in the intermediary times, it's best to have those game plans. And maybe even more and more, I should probably talk about the small, like when we see these big peaks, I'm usually removing like 2 to 3% back into USDT anyways, just because when you're up 100% on a move in a very short period of time, it's always good to make sure you have more powder, or like in the dry keg for when these moments happen, right? So a big part of the conversation again is well, first off, is the bull market over? I don't think so. Even if we do see a break down to 35,000, I believe it will be an analog very similar to what we saw here. So back in August, let's take a look at this. So this is a distributional trading range that took place in August. Well, that's not a great measure of the end of the bull market either, because here you had what was an upthrust. And again, this is the key indicator that normally signals to me a distribution. And we've talked about this many times, and this is what I'm going to go over today, is the amount of supply that came into the market to push the upthrust. This is an indication that we're hitting a temporary distribution, and we have not at all seen that in any way, shape, or form. Right? So here, we've talked about this, and look perfectly, there it is, a massive amount of supply coming into the market, creating the upthrust and then distribution, right? But look how temporary this distribution was. All it did was create a dip down before creating one of the most powerful trading ranges we know of, which is a rising gradient bottom. So I feel that even if we dip down to $33,000, because we are missing some very key signals, that this is only another step into the finality of our bull market. And it will basically shake out any weak hands. So here again, you can see that there were times along all of these trading ranges where we had what would appear to be signs of weakness to the average person who does not know that much about Wyckoff trading ranges and is strictly only looking at the assessment of the architecture itself and ignoring the supply and volume signatures. So, am I perfect? No. Do I know everything? Not even freaking close. I live in the jungle and take psychedelics on a frequent basis. I have a big macro perspective. On the day-to-day, the reason I show up with you guys is because it offers me one of the most valuable incentives to learn, is because I'm forced to every day show up. Well, not forced. I love doing this, by the way. Maybe that's the wrong conjecture. it incentivizes me every day to show up, to continue to further my studies, to make sure that what I'm doing is providing myself the most intimate relationship with the learning processes going on. So where does that lead us today? Number one, we did not see a massive amount of supply come into the market during this upthrust, which, as we saw in the previous distributional and only temporary distributional range, was a key part of the schematic. And we had talked about that. We had talked about this many times, that this was missing the supply signature on the upthrust. So here, this is the other key part of the area that we want to look at as well. I should turn that down so it's not so loud. Okay, so the other part of these areas is what's known as effort versus result. So this is another area where the architecture and the schematic of the trading range itself is basically irrelevant. So here we go. Look at how much supply it took to get us down, let's say this far. Look at this, the amount of supply each time trying to push us down, right? So this huge amount of supply signature here caused this down result. Yet, if you look at something that's almost equivalent here, let's just measure this out for fun too, so you guys can see. So this price spread here took approximately this amount of signature here. So very, very thin. Whereas to some degree or another, this almost identical price spread took an enormous amount more supply coming into the market. And this is generally the indicator that the bull market, again, is not over. Now, again, am I perfect? No. All I'm trying to do is use what we've learned and at least continue to address what the potentials are based off the information that we've learned. Again, a lot of this you can find for free. If you don't know, we offer all this in our private group as well, but understanding the composite bull market, or the composite man's bull market campaign, is extremely important, and how their markup works, because they have these intermediary moments that look like they could be distributional and they're not. And we really want to focus on this because, again, this is one of the most important parts, and it's the most difficult to identify. It's almost the moment where you're like, well, is that a deer paw or a bear paw? Because if it's a deer paw, I ain't going to be too worried. But if that happens to be a grizzly bear paw, good goddamn, we could be in for one heck of a ride, right? So it's not to say that this is not a dangerous moment. So as a contrarian, when we see average YouTubers, and I don't mean to be discrediting in any way, I'm an average YouTuber. I'm probably one of the least popular YouTubers out there, and for good reason. I'm ridiculous, right? So I don't go against that. So for me, when we see that these signatures are having, you see an increased supply signature on the downside, with the same amount of price spread that we were able to push to the upside, this is actually still bullish, right? At least from the supply signature side of the story. And that's really important to understand. It's not just about the architecture. A lot of us get that wrong. It's very easy to get that wrong and to think, oh yeah, look, this is clearly a distributional range. Let me just ignore everything about the supply and demand story altogether. And a lot of people do that. And good on them for not continuing to study. But I feel the incentive to consistently show up and ask myself these questions. This is a hypothesis. It's not, I do not have a factual answer for this question, right? But I still believe we are well on our way into the bull market. And let's turn what I believe to be one of the most important parts of this story back on, the volume signature. And here, another moment in time where you have a massively increased supply signature and a diminished price spread. Right? This is a bullish signal. If it were the opposite way, and that's what we're looking for generally, is if you had this amount of supply on the negative side causing this downside, I would be like, hey, that's a grizzly bear paw, ladies and gentlemen, right? But that's not what we're seeing. We're seeing an increased supply signature with a decreased price spread, or at least similar. Right? So to me, this is the reason why I do not think the bull market is over. I do believe what we're witnessing is probably a spring. I'm a contrarian by nature, so every time I see the masses talking about, oh, look, see, this is a distribution because here's the schematic. Well, what about the most important part? It's not just the schematic, but if you do your study, it's the volume signatures that align with these schematics as well. So again, here you can see this massive amount of supply coming in with a limited price spread versus what they would get to the upside. And that's important. It's when we get to the top of the market and you see that same amount of downside to limited supply signature that it starts to get more worrying. Now, we're right in the middle of this. It could go either way very easily, right? And that's worrying. So I'm not going to say that I'm correct here. Was I wrong? Sure, definitely could be. But I removed a bunch of risk at around 56,000 for this exact reason. I don't fucking know yet. All I'm trying to do is go through the process of learning and making a good argument. And again, for those of you that showed up to the market late, let's say you just entered at like 60,000 or something horrible, try to remember the macro perspective. You know, I bought my first Bitcoins when they were triple digits, 4 digits. Now we're up here at 5 digits, probably on our way to 6 digits. The most relevant factor of understanding this story is really finding your primary spring signatures, which happened in the pandemic. They're almost always highlighted by an extraordinary amount of fear in the markets, and where we are now. Again, this schematic looks like a perfect rounded top. But if we go back to August and we look at that same moment where you had a rounded top, it could be easy and very deceiving to think that, yeah, this was the end of the bull market. Did I sell all my Bitcoin? No, not until I'm convinced that the market's over. And even then, I won't sell it all. I just reduce the risk to make sure that I can cover all of my business applications and life needs for the next 3 to 5 years. Because I know that no matter what happens, I have to live my life still. And I've operated that way as an entrepreneur way before I ever realized that an investment was an important part of my general structure. But again, here is a beautiful rounded top. And a moment of distribution. So let's pretend that this was 60K right here, and that this is $33,000 right here. This is an analog that I think is possible. Is it the probable one? Potentially more probable than it was 2 days ago when we first looked. That's for dang sure. But again, the signature here is the important part. Note again how much supply needed to come into the market to produce this price spread here. Right, versus the limited amount of supply it took to get the price up, even here. And again, this is important because it usually is designed to shake out the retail hands. These moments are usually designed to shake out the people who get bored, who get scared, and who do not understand the macro terms. The big players here have hundreds of millions and billions of dollars quite frequently, and that's who we're messing around with. So I'm going to jump off into one or two other quick conversations and then kind of go from there. Okay, so one of the things I wanted to go over here was this. Okay. First off, I want to give a big shout out to Ark Invest. I love Kathy Wood and Yassine Alamandra here. You can follow him on Twitter. Put out this statement too, just to clarify some of my thoughts. Look, first off, I like Elon. I like most human beings. I think we're all human and therefore we're all full of flaws and stupidity, right? Clearly, that's the case. No one's perfect. Everybody does dumb shit. So let's go over what Yassine had to share here because I think it really helps round out my sentiments. On Wednesday, roughly 3 months after a $1.5 billion investment in Bitcoin, CEO Elon Musk announced on Twitter that Tesla will not accept Bitcoin for the purchase of its vehicles any longer, citing concerns about Bitcoin's mining reliance on fossil fuels. That said, Tesla is not selling any of its Bitcoin on its balance sheet, and it did not. He even came out yesterday. If you follow us on Twitter, you'll be able to see that. I retweeted it as well. Tesla did not sell any of their Bitcoin. And if they did, we wouldn't have to wait a quarter. He actually has to tell us within 4 days. So to clarify any speculation, Tesla has not sold any Bitcoin. And that's important to understand. And again, remember that this other tweet about the next quarter, Tesla selling Bitcoin, like, that was really cutting the edge close here. You know, they have to file within 4 days of making big moves like that to let all their shareholders know. 4 days. We would have known already if they had done that. So let's go back to this piece by Yassine Alamandra here. Tesla's decision seems to be triggered by a private equity firm known as Greenridge plan to revive a coal power plant to mine Bitcoin. Musk referenced the announcement in a tweet. Subsequently, Greenridge clarified not only that its plant is powered by natural gas, not coal, and feeds the grid, but also that it bought carbon credits to offset the emissions. Now, that's a little bit of a hard story to stomach, that you can just buy credits, but nonetheless, that's what they're saying, right? So they basically came out and said, look, Musk, you're off. It's not a coal plant. It's a natural gas. Like, get your shit together. You're just tweeting stuff that's not actually true. So in our view, the concerns around Bitcoin's energy consumption are actually misguided, contrary to consensus thinking. And again, I'm a contrarian. I always look for those moments to go against the masses. Generally speaking, we believe that the impact of Bitcoin mining could actually become a net positive to the environment. And with the real world data, we demonstrate, and again, this is a great PDF we went over the other day, how mining could impact the amount of renewable energy provision to the grid by transforming intermittent power resources to the baseload generation by way of energy storage. We illustrate that renewables would be able to satisfy only 40% of the grid's needs in the absence of Bitcoin mining, but 99% with the commercial subsidies associated with Bitcoin mining. So here what they're saying, just to kind of clarify, is that generally things like solar, hydroelectric, when everybody goes to sleep, there's an excess amount of power that's being generated that does not go anywhere. Bitcoin could help offset that so that these renewable energy companies were actually net positive for their ability to produce revenue when everybody else was fast asleep doing nothing. And that's extraordinarily important. It's an incentive for these renewable energy companies to get on the mining game and play along, because then when everybody's asleep and nobody's using electricity, they are still producing a profitable resource, which is keeping the Bitcoin system up and running. So shout out to Yassine at ARC. If you do not follow him or Kathy Wood, I highly suggest it. I really liked his write-up on the Bitcoin mining white paper as well. I don't follow him, but here's what I do. I go add remove to lists, and if you guys want, you can follow my Arcane Bear support list. I try to keep my followers low. Anyways, next topic. Okay, we get into a little bit of a, we're going to get in a little bit of a tricky conversation here. And look, I'm probably not qualified to be having any of these conversations, but I'm going to go ahead and do it anyways. Okay, so one of the things I started to go over, and this is always a question, you know, one of the things, if you do your research, there's a book called Dying of Money. There's a few other great books, articles that have come out around the idea of what happens during hyperinflation. And one of the early sentiments that we saw in the Weimar Republic's hyperinflation moment was this kind of overnight millionaires, right? And I made a tweet the other day that says, I think all of my friends are millionaires now, which this is basically true. And this is usually what happens around 2 to 3 years before hyperinflation really kicks in. For those of you that are fans of Cliff High as well, watch his recent video on BitChute. He no longer posts on YouTube, but I thought he had a really great sentiment, and it's about the backlog of money, right? Right now, it's extraordinarily expensive to buy certain things like lumber, building supplies, depending on what country you are. It's very difficult to get them. And because of that, one person spending, like, let's say, first off, Bitcoin is up this high because of inflation, period. All of these assets are up this high because of inflation, period. We are seeing inflation at an extraordinary rate. The US Federal Reserve and their $1 trillion plus stimulus bills during this pandemic has flooded the markets with money. And not only that, they're basically giving average citizens paychecks so people aren't going to work. And the other week when I had to buy a new computer, I had to wait in line. And that's here in Costa Rica, where we do not have direct stimulus. But I can see the sloshing of that money moving into the average person's pocketbook and them going out, taking out more debt, buying more things. And it starts to backlog in the need and necessity, right? So hyperinflation doesn't hit all at once. It's usually a slow going process. And here are some of the ideas. And the only reason I want to bring this up is because I think it's important to understand that what we're about to go through is probably one of the most tumultuous times that any of us have been through, unless you happen to live through World War II and are still alive today, which would be incredible. And congratulations for making it like over 100 years old. But hard times make for strong individuals. So this should be exciting to all of you nonetheless. Corn prices have risen roughly 50% in 2021, and bushels cost more than twice than it did a year ago. Well, most of you are thinking, well, I don't even eat corn. What difference does that make to me? Well, it's important to understand that most of the animals that you might eat actually eat corn, and a lot of the products that you eat have corn syrup in it to some degree. Corn is kind of one of these base articles of function. Soybeans and wheat have also started to climb dramatically as well. Corn, up 150% on the futures price, or sorry, 125% on the futures price. Soybeans up 75%, and wheat currently up 50%. These are kind of the basic necessities of the average individual on a day-to-day basis. I want to make a kind of a dickish sentiment here by saying over the last 24 hours, my account has fluctuated more than like 90% of what the world's population makes. So 90% of the world's population who is actually out there helping with soy, corn, beans, producing a lot of this stuff. My account fluctuated more than what each of them makes in a year. And I'm like basically a nobody compared to people like Musk and Jeff Bezos, right? So the important part to here is to recognize the likelihood that inflation is going to come. It's going to tear through our society. And over the course of the next decade, it is going to be a bumpy ride. So keep that in mind, that all of this fun moment, it almost reminds me of that moment in the movie The Big Short, when they're like, we're going to make so much money. But this is actually a pretty bad situation for the average individual. So although it's exciting, we've been making extraordinary amounts of money. All my friends have turned into millionaires over the last 9 months. This is actually probably a leading indicator that there are worse times coming, and they're not necessarily easy to solve through monetary function. I own a farm here with a private well, hundreds of fruit trees, a greenhouse, and solar panel backups just in case. Anyways, so the point of this is, I want to just kind of quickly go through this, is that we are seeing it's about to get much worse. Supply chains implode and price doesn't even matter anymore. We're seeing this across the board, visualizing recent price explosions in lumber. And I'm sure you guys have seen tweets and memes like this. $50,000 worth of lumber in 2021 versus 2020. Basically, $50,000 in lumber would produce, what is this, 10 and 1/20 single family units. Now it only produces 2 1/2 single family units. So this is an extraordinarily high amount of inflation. You're looking at almost 500%, basically. That's a pretty ridiculous move up. So again, here, just the average price of lumber over the last 25 years has massively increased, going from an average of around $200 to $400 per, we'll just call it a basket of lumber. I don't know what the fuck the name's called, to $1,600. Right? This is an extraordinary amount of inflation on the average consumer price index. And the reason this is important to understand is because most people don't, when people get wealthy, most people are not smart enough to go buy farmland. They buy ridiculous things like Gucci, Rolex watches, and those things become basically worthless in hyperinflation moments. Like if you go and do your study, I highly suggest reading the book called Dying of Money. This is a really good one. Dying of Money. It's a great read by Jens O. Parsons, Lessons of the Great German and American Inflationary Moments. I don't want to preface the book too much, but just understanding that what this does when dollars become worthless, it really massively skews the value of what something is, right? So the wealthy who know how to keep assets effectively generally do well, because an asset is something like, I've gone over the value of my property, right? What is a waterfall on your property worth to you? That's a pretty interesting question to think about. Well, for me, regardless of what my price, the supposed dollar price of my property is, that waterfall will never change. That access to clean drinking water won't change, right? So the value of something is much different than the price of something. And this is probably one of the hardest parts to understand about any good investment thesis, is what is the difference between the price and the value of something, right? So when we go back and we look at where was it here? This one, visualizing the price of the average consumer index, and we see these massive 500% increases, a loss in supply not being able to be delivered. And again, this is what this goes over. The supply chain is basically breaking down right now. India is not delivering medicines. China is not always delivering the medicines. And these become more important as time goes on, because right now they generally do a pretty good job of at least making it look like the stores are stocked. Now here in Costa Rica, we produce rice and animals, and we produce most of what we need on a day-to-day basis here in this country, because I alone have 150 fruit trees on my property. Right, I could eat fruit every day on the property that I live from. I have everything from cacao to potatoes, turmeric, sugarcane, mangoes, mangosteens. I even have ayahuasca growing on the property. I could chill out here for a long time and probably not even notice that anything was going wrong. But the average person lives in cities where they are 100% reliable on the supply chain. We have been talking about this potential for over a decade, not on this channel, but at least in our daily life, that the effects of the coming economic collapse, when it happens, and it will be the death of the dollar, or in this case, dying of money, is going to be very difficult to navigate. And the earlier you can start to try to think about your navigation through this process, the better. I do not spend the extra money that I have on stupid shit. Usually I buy more seeds. I've got a box full of seeds. I almost bought a horse last year. I could get a goat, chickens, put a cow on the property over there, right? I've got an extra 0.75 acres I've never even touched of raw wood still. Anyways, the point of this is understanding that where we're headed, that when we see these massive evaluations of prices, that we're all getting excited, yay, Bitcoin's price is up, that the downside here is that this is likely a signal of hyperinflation coming. And truly, I think that things like Bitcoin are one of the only things that will help save our ass. So I am a long-term proponent of owning Bitcoin regardless of what happens in the inflationary world. I think that is extremely important because as they print dollars, what are we going to use as a monetary source? And I like the function of something that was not created by a government. I am trusting code. I am trusting our belief not our belief, but the valid function of this code and our ability to keep it sustainable, well, maybe not sustainable, but safe during these volatile and turbulent times without the necessity for any government, because we will likely lose them. The Weimar Republic's government basically started to fail in those moments because how the fuck do you pay anybody? If your money's not worth anything, how are you paying the government to keep in check? Like, what's good are your taxes? None of those things are worth, like, the taxes that you have to pay are now higher or lower or what? Now that your property is worth $850 million because of the paper is worthless? This is a restructuring of value that we will go through over the next decade, and it's going to be a bumpy ride. I know we get all excited about how much money everyone has made, but please understand that these are also signs of probably an impending moment of very difficult times for the world coming ahead. We are in those difficult times now. So stay strong, stay fresh, stay focused. This is Teal with the Arcane Bear. I hope you guys enjoyed that. Please remember to go down and subscribe to all of our YouTube channels. Well, I'll be producing content all the way through this fun ride, hopefully, as long as the internet stays up and running. And again, maybe we're wrong. You know, we've been since early 2016, I've talked about a market melt up. And actually, you know what, since we've got some time on deck here, it's only 9:34. Let's go and look at some of our other measures of market sentiment here right now. Let's start by going, this will be a kind of a fun episode. Let's start with the VIX. So the VIX is a volatility index. The VIX jumped recently, probably because of the new India variant. It is like 50% more transmissible. I'm not going to get in an argument. I'm not even smart enough to pretend to do so. But generally speaking, the new variant, probably from stupid vaccines. Again, I agree with Gert Van Bosch on this one, but you basically probably trained the virus to be smarter by only half-assed giving vaccines. We've never once in the middle of a pandemic started giving vaccines. We normally try to do it after the pandemic has quelled a little bit so that we have natural immunity more so than teaching it to gain strength and functions against the things we're using to stop it. So probably not the smartest idea, but nonetheless, again, I'm not qualified to have those conversations, but this is my conjecture. We have jumped 78% in the last 32 days. Probably because of this. And every time we see the VIX spike, we have seen Bitcoin drop in the past. We've actually seen our whole market take a general hit because of it as well. One of the other functions we like to go over here as well is the DXY, or the dollar index. The dollar index took some big hits. Let's actually go out to the week or monthly on the dollar chart here. So here's the dollar chart, excuse me, over the last 40 years. And in 1978, this was basically the dollar chart gained a lot of strength this was kind of, this whole area was basically when we started to go off the gold-backed reserve. We saw this massive increase as the US dollar became the reserve currency and everyone started to settle deficits in the US dollar. We then collapsed back down, and we've been trading in this falling downtrend for quite some time. I suspect that this is going to consistently create further weakness in the dollar as the and more probably more importantly, but as the degradation of the trust of the United States government decreases, the dollar is going to drop dramatically as well. Bitcoin is supposed to be a hedge against these failing currencies. So if we go in on the daily, we have seen more of this downside potential here in the US dollar as well. Big up thrust, very quick movement down. No supply signature or volume signatures here for the US dollar because it's just basically irrelevant when they inflate the money supply at such a high rate. So we can see this, the likelihood of the dollar dropping back towards the 70 rate region as well. This should be positive for Bitcoin, but again, in all of this volatility, as value is being, as we are reevaluating what is valuable in life, it's really hard to say. Like I said, I know what a waterfall on my property is worth to me, no matter what the price is. And that to me, that function of viable drinking water on a day-over-day basis means a hell of a lot more to me than a dollar price. Okay, so let's take a look at the S&P 500 as it has opened up today. I've talked about this a few times as well. Since 2016, since 2017, I talked about pretty much what I considered would be a market melt up. And that's what we have seen. As they print more dollars, the asset inflations show up in the evaluation of the stock market itself. The S&P 500 has peaked into new all-time highs after a very short reprieve of the pandemic. Here again, from the bottom of the pandemic, the stock market is up 100% almost. That is incredible for no particular reason whatsoever. Let's go take a look at the NASDAQ as well. The NASDAQ is also hitting pretty close back to its previous all-time highs as well. And when we go back out to the monthly, you can see a very similar story to what we witnessed in the S&P 500. Was actually, look how beautiful this is, a reaccumulation after decline. We've gone over these as well. Here's your primary decline signature. And then we had a longer reaccumulation period afterwards before we had this final breakout back in 2013. And we have only gone up since then. And we've actually started to increase our parabolic levels moving out of this marketplace. So here's the only up scenario. There are very few times. And again, this is what we've witnessed in pretty much every asset, is that as they print, everything goes up because the dollar becomes worth less and less. So we'll continue to watch this. Again, since early 2016, way back here, I've said the market will probably not crash again, that assets are worth more than paper dollars, so asset prices will continue to inflate, whatever that asset might be, right? Whether it's property, ownership of equities in companies that are producing viable products and services that will never go out of style. That's where we're at right now. We're basically witnessing real-time inflation on a day-over-day basis. So keep that in mind. Nothing has changed in any of these marketplaces. Although the VIX, because the Bitcoin is such a volatile asset, the VIX here usually when the VIX spikes, Bitcoin price does drop dramatically. Anyways. We've gone over this. You can go back and time it. Here's January 28th. This was our first drop from like the $40,000 to $32,000 area. Here was the first drop from 60 to back down to the $50,000 area. And we've been in a reaccumulation here too. So again, with the volatility index spiking over 80% in the last week, it's definitely a high time to keep an eye on all these other more difficult conversations around inflation and the difficulty that we as a human species are likely going to be running into on a very short-term basis. Anyways, I apologize we didn't go over anything else today. I thought it was pertinent to give an update on my sentiment about the long-term macro perspective here, because remember, the dollars that you have today are not going to be the same that the dollars will be able to buy tomorrow. If you can move into hard assets, I mean, again, Bitcoin I consider a hard asset. Technically speaking, it is extraordinarily volatile. But if you haven't yet, find yourself some farmland to buy. I've owned farmland for almost 8 years. There's a reason for it. Well, first off, I love living in nature and I love the jungle, but also because these moments of hyperinflation, if you read books like Dying of Money, it becomes very difficult to navigate the value or the reevaluation of things that we are headed towards. Anyways, again, remember guys that we are only 24 subscribers away from 35,000. Help us break that 35,000 mark today by subscribing to the Arcane Bear channel, hitting that little bell. That way, anytime we go live, you will be notified. Please subscribe to any other social media channels if you would like as well. Steal with the Arcane Bear. With over 550 of you online right now, thank you all so much for supporting us. I remember, by the way, this is not a doom and gloom. I want you guys to think of these moments where things get difficult as a moment to get stronger. Yeah, I don't know how many philosophic, stoic, or religious texts have talked about those moments, but when things get difficult, it's a moment to buck up and do the work. Anyways, Teal with the Arcane Bear. Thank you guys all for joining us. We'll see you on the next episode.